this up.
Do it.
Recording in progress.
What's up, everybody? Welcome and happy Thursday. I see Michelle is already here with us. Thank you for being punctual. It's great to have you.
Hi, Michelle.
We have just opened up the room. We're going to give everybody a chance to trickle in and get settled, find that good seat. Welcome, Hal. I hope you're having a nice week. Always good to see you. Shout out to anyone joining us on the YouTube simulcast. If you'd like to be within the Zoom sessions where we host these Profits at Noon, check under the YouTube video description. There is a link to join us directly within Zoom if you'd like to do so. We'd love to have you. Hi, Michelle. CL, welcome.
The usual suspects.
Love our usual suspects. We're going to get started in just a minute here. I think everyone here is familiar so far here in the Zoom is familiar with these sessions, with the format. Welcome, William. This is Profits at Noon. My name is Nate, co-hosting these sessions with our very own Richard Krugel. We will be live again, of course, next week, 3 days a week, every week, Mondays, Wednesdays, and Thursdays at noon Eastern Time. So we're going to get started here. Let's kick things off. It is 1 minute after the hour. So I'm going to very quickly just give you a heads up. Looking ahead to next week, we will be doing a tool spotlight on Monday's session. We will be featuring the Micro Power Trader. So Richard is going to bust that out, roll up his sleeves, take a look under the hood, and show you everything that you could want to see or know about that tool if you're not already familiar with it. And then, of course, we will have plenty of time for Q&A, etc. Speaking of Q&A, if you have any questions throughout today's session, please feel free to fire away there in the chat, and I will make sure that ends up on Richard's radar. If you have anything you want to pick his brain about, we are happy to dig into that with you. But let's get things going. Again, my name is Nate, co-hosting with Richard Krugel. This is Profits at Noon. So we're going to show you the levels that we are actively stalking for entry, and we will steer you clear of any market traps or news bombs that could be waiting around the corner. So Richard is about to dive into lots of great live analysis. I know he has some extra things he wants to show you on the ES today, so stay tuned for that. And of course, we do encourage you to join us for follow-up sessions, so we can track all of this analysis. We can track these levels that we call our levels to lock, and we can all be together to see the outcome of all this analysis. So lots of great stuff to show you today. So without further ado, we're going to bring Mr. Richard Krugel in, and he is going to kick off our analysis for Profits at Noon.
Thanks, Nathan, and welcome everyone. Oops, my power just came back. I'm running on an electric backup here because we're having issues here in South Africa with power. But anyway, I'm still up. Can everyone still see my screen? Just please drop a yes in there. Sometimes there's a little bit of a delay when this happens. We just switched over to municipal electricity again.
Sure, it's looking good from my end.
Awesome, good, and I'll get going. As always, guys, just please remember that all information in today's session is provided for educational purposes only. It's not an offer or recommendation to trade futures, stocks, options, or Forex. All right, as always, we're going to be looking at the ES, the NQ, the YM, Russell, gold, and crude oil. And as Nathan said, I'll spend a little bit more time here on the ES today. I know I normally use this as my primary count, looking at pattern analysis as well as some wave counts, etc., etc. So something that's jumped out at me, I've been thinking this might be a possibility that, you know, we've been looking at this move higher here since beginning of March as a potential one, where this potentially traced out as a leading diagonal. We had an ABC for a potential 2. And then I was like sort of in between whether this was a 3, you know, price continued higher. We had this phase here, we had made all these zigzags to the upside. And whatever, if we counted this as 3 or this as 3 or whatever the case might be, we had this move to the downside. And I was saying that price should not penetrate the area of where the first wave ended. But it did actually just puppeteer on the June contract on the ES. But I mentioned earlier this week that when I looked at the SPX as well as the SPY, that price actually fell short of this level over here. So it's just how some brokers splice together the contracts, the past ones that expired, It's not necessarily always 100% accurate, and I think this is one of those instances here. So this was definitely still a legitimate end of a 4. I would say definitely, that's the wrong word to use. Then we had this move higher. I was actually expecting a higher move to follow. That didn't occur, and the possibility still remained that this was a 5th wave, right? And that what I've been saying for a while, after a 5-wave sequence to the upside, we could then potentially see a deeper correction. All right, now, and this is the pattern that's jumping out at me at the moment. I'm not saying that it is 100%, but there's some clear levels that needs to hold for this pattern to potentially still, well, I won't say still remain a possibility if that is the case. And that could potentially suggest that this was a 3, this potentially still a 4, and a 5th wave still to follow. That's the only bullish count I really still have here should price move higher. But it really needs to start, finding support very soon. Now, if you look at the SPX and the SPY, disregarding this week here on the ES now, on a June contract, then those highs were around about this sort of level here. So for as long as price stays above this area, and let's say starts moving back to the upside, I'm still going to assume that this is a 5th wave underway. If price breaks this level, then I'm going to do this. And then that we start with a deeper correction. Now, the pattern I'm talking about here is one that previously occurred back in 2018. I'm going to switch to a bigger time frame for you guys here. And it is an expanding triangle. So quite often, you guys know triangles. You can either, let's say, have ascending triangles. Let's say you have a move to the upside, and then you have a shape where you have a flat top or horizontal top, and then you have a bottom and an upwards moving bullish market that continuously moves high with higher lows forming. So you'll have something like this. You have a market move into an area, and you get an A, a B, a C, a D, an E, and then the market continues higher. Or the other one that everyone's probably familiar with is a symmetrical triangle, where the range as the pattern progresses gets narrower and narrower into an end, and then you also have a breakout. In the bullish market or bearish market, let's assume we're working with a bullish market here, you get into an area, then you have an A, a B, a C, a D, and an E, and then price moves high again. Now, a great example of an expanding triangle is this one that occurred here in the beginning of 2018. And it lasted for 2 years. It actually terminated here around the end of, what was this, March in 2020. An expanding triangle also have subdivisions of 5 waves, A's, B's, C's, D's, and E's. But with ascending triangles, ascending, I'll keep on saying that. Expanding triangles, all the subwaves sort of just breaks previous highs and lows, and it actually expands. So you got this shape of an expanding triangle. Some people call this a megaphone. Now, these quite often happen during very volatile times. They're very, very difficult to predict where these swings might end. But one of the characteristics that they do have is that they tend to abrupt each wave tends to, like I say, create V-shaped bottoms, V-shaped stops. Now, obviously, this is a beautiful picture perfect example here. And then look what happened quite often when these waves do end, you get a massive reversal back in the direction that preceded the actual start of the correction. Now, let's switch back to the ES again. Now, there might be evidence here that we are actually seeing an A, a B, a C, a D, and C price just broke these previous lows with an E here. And then we're going to see another move to the upside, giving this entire thing the potential of being an expanding triangle as well. Now, if you followed me in my analysis when we looked at gold, and just switch back to that, when we looked here at this triangle, I sort of said back here when price, I think it was around about here, we could be dealing with a symmetrical triangle. It could have also been an ascending, we just didn't know. but price would need to find resistance in the area and then move back again, create a higher low, and then that should be the early indication that an E wave has ended. So you really don't really know until you're almost dealing with your D wave and assuming or know when you follow these patterns where D waves typically end, that you might have an E wave, and then when you have a strong reversal, that sort of gives it away that an E wave has ended. Now, this obviously being a symmetrical triangle, if this is a expanding triangle, then we could be dealing with the E wave that's unfolding right now. All right. And it could just as well abruptly end and give us another swing to the upside. Now, before I look at the internals here, there's also Fibonacci relationships between all of these swings, which is also a common feature when dealing with triangles, whether they're symmetrical or expanding. I'll show you that now. But as you probably all know, that the Fed decided to raise interest rates by another 25 basis points yesterday, and that they'll leave the door open for potential future hikes. So there might be, not hiking again that aggressively in the near future. But they also say it's all dependent on the incoming economic data and credit availability. So, we've had, what was it, unemployment. Let me just have a look at today's schedule there. Unemployment claims, which was slightly worse than expected, yet the market's still moving lower. And tomorrow we have non-farm employment change figures coming out. Now, if that's worse than expected, this might actually be that instance that if this is an E wave, allows the market to swing back to the upside again. If you've been following my analysis last year, beginning of this year, interest rates have always been, not always been, for at least since last year, beginning last year, and on everyone's mind, and it's obviously why the market's always also been moving lower. But I've also been saying that, with interest rates, they need some sort of bad news, in this case, job data, for example, which has been pretty resilient throughout last year and even into this year. Now, if they start seeing that that's going to, weaken considerably, then that might be, a clue for the Fed that they can hang back with their future rate hikes, if that makes sense. So this could also just be a knee-jerk reaction to the downside. And quite often when you're dealing with patterns, you quite often have an event, an economic event, not always, but quite often that actually either before or after this pattern concludes, gets, that in this case, potentially an E wave ending, and then that move to the upside that could potentially unfold. Now, I was saying that we need to have a look at this level. It's around about 40.40. Let's call it 40.40, right? If price were to break below that 40.40 level, and I have to look at the SPX again, for which I don't have data at the moment, and the SPIDER or SPY, the ETF, and price falls short of that, and we start seeing a very strong reversal back to the upside, potentially breaking either today or tomorrow. It doesn't look like it's going to happen today. Today's high, which was around about almost close to today's pivot point at 4,119. That could be an early indication that I was potentially right about this E wave. But like I said here, we're either going to know if I'm right or wrong about this very quickly. It's not about being right and wrong either, I would say. It's just like you expect or see something in a market, you see something that jumps out at you, and you know how these things tend to behave. Then, in this case, if this E wave if this is an expanding triangle, we need to see a sharp reversal back to the upside very soon without price penetrating this area. Then this could still then be a fourth wave, and you guys are probably tired of me like moving my third and fourth waves all over the place. But this is, for me, the only sort of count that can still keep this bullish move to the upside alive, if that makes sense. Otherwise, fifth wave already completed. Like I said, I'm completely wrong. I'm seeing things here. This is not an expanding triangle, and we've already started with that deeper decline. Not meaning that it's going to be bearish over the long term, just that it's potentially going to be a deep correction that's going to retrace a decent part of this move to the upside. So that's the only sort of thing I'm seeing here that could potentially keep this count alive, an expanding triangle. Oh yeah, before I actually move away from this expanding triangle, if you look at your internal waves, assuming that you are dealing with a triangle, especially expanding triangles, and assuming that this was a wave A to the downside, then if you measure the height of your A wave and you look at where this potential B wave, I'm not saying that it ended right at 123.6, which is a fib ratio. Just fell short of 138.2, right? Let me get rid of that again. Now let's take the next one. Assuming that this was a B wave, and we measure from B to A, projected from the high of a proposed B, again, 123.60, right? So there's some internal symmetry between these waves, typically what expanding triangles like to do. They don't always go to the same ratios, but they quite often, these internal waves extend to certain ratios that tend to repeat, if that makes sense. So we have to measure the height of B to C, and assuming that could potentially have been a D, 100%, which is not really a fib ratio, but if we do the same from our proposed D wave, or what could be a D wave, to where our C wave, proposed C wave, could have ended, then we've just reached the 100% again. So we're really here, do or die, to keep this sort of triangle thing alive. And as you've seen probably in these previous examples, this is again a picture perfect example. Very volatile period. We have these very sharp reversals. It's typically how triangles or expanding triangles behave. So if price were to, let's say, find support here today at S1, which is now around about 40.72, we also have today's projected range low at 40.53.50. You know, this is sort of getting into the danger zone of where it could invalidate that this is a fourth wave. So as you could probably see from what I'm trying to say, is that price would really need to find support very quickly. It could still move a little bit lower to keep this expanding triangle idea alive, and that this potentially could be a fourth wave of this expanding triangle. All right, so the early indications would be that this potentially was the end of an E wave, either here or a little bit lower. If it does fall short of this invalidation area, so we start seeing a very sharp move back to the upside, similar to what we've seen over here. All right, so we got to keep an eye on this invalidation area around about 40.40. Like I said, I think even on the SPX it's a little bit lower at 40.39. So as long as price breaks, it stays above that, we start seeing a very strong reversal to the upside, and potentially today or tomorrow see a strong move above today's highs, which printed at, what was today's highs? 41.18. Then that could potentially be an indication that an E wave's ended, assuming that this is an expanding triangle. So hopefully that makes sense to you guys. I've been studying patterns for a very long time, very, very fascinated by their behaviors, like I call their characteristics, as well as using different tools like market geometry, as well as fib extensions, fib retracements, etc., etc. So this definitely jumps out to me as a potential expanding triangle. I'm just trying to still figure if price were to move higher, what are we seeing and what's it going to make it move higher? And the only thing I'm seeing here is that this could be expanding triangle. Unless I'm completely wrong about all of this, that fifth wave already ended, and that would become more evident that potentially did if price would then break into this area that I've mentioned, 40.39 to about 40.40. Right, so again, potentially if the Fed starts seeing, let's say, tomorrow's ADP non-farm payrolls as worse than expected, you know, investors might start thinking, yeah, all right, cool, they won't raise interest rates very soon, or likely very soon again, and then market might see that as positive, and then we could potentially see that another strong move to the upside, but could also just as well fail. So keep an eye out on tomorrow's numbers coming out. Again, also this whole thing with the banks is also causing a lot of fear, still a lot of jitters in the markets about these bank failures. The big ones obviously being SVB, Credit Suisse, and I think it was Regional Bank this week or something that was, I don't know, bought out or taken over by, I can't remember, JP Morgan or something like that. So yeah, a lot to take in, but from a pattern perspective, definitely could be very near to the end of an E wave. And if we are right, this could also, give a very, very, very good trading opportunity back to the upside with minimal risk, and also knowing exactly where these invalidation areas are to either validate or invalidate the pattern as a whole. All right, so that's enough on the ES. So hopefully you guys are seeing and understanding what I mean here by the expanding triangle. So definitely could be what we are seeing. Right. What's going on here now? The NQ. Different pattern here. Also sideways, very messy. Also price is pipping this previous high here. Recently, when was this, last week or the end of April? But here, the internal wave of this move to the upside looks a little bit clearer. It looks like a 5-wave move, right? So, does that support the idea that this was potentially a 5th? And I'm completely wrong about this expanding triangle. Who knows? I think we should probably have our answer very soon. With that invalidation level so close on the ES, it's either going to hold or it's not. So we'll probably have to revisit things on Monday and see how the markets have reacted to tomorrow's news. That being said, price has just reached S1 at 13,008. Will that hold a support? We'll just have to wait and see. All right. YM also been pretty weak. Same thing, just put these previous highs and it's now making its move lower. On the YM, we were saying for a while now, the structure here looks also a little bit cleaner. Well, not cleaner, sort of similar to the ES. 1, 2. Was this a 1, 2, 3, 4, 5, 4, 3? Was this a 4? Was that a 5? And now we're getting a deeper correction. Could potentially be. Potentially even here, we could be seeing an expanding triangle. So, yeah, we'll just have to keep an eye on things. Like I said, price is very close to levels and keeping an eye on that ES, if that validation level will hold or not. Price already reached today's projected range low, which was at about 33,075. Bit of a confluence with today's S2 at 33,060 and is currently finding temporary support there, although price did move below that. Price also breaking below this lower median line of this upward sloping pitchfork that's contained price action pretty well. Even when price reached, active support, resistance, failure to do this on the second turn to the upside, but even to the downside, a bit of support, and it's now reached this lower median line again. Not uncommon for price to undershoot these areas. There's also you just have to see how price close in relation to these lines as well. You might see a pullback all the way back and then another continuation to the upside. Again, who knows? We'll have to see what happens. Russell, as you all know by now, not very fond of the Russell that much. Again, good luck trading this. If maybe on an intraday sort of time frame, this will be easier to trade, but very messy. Price just fell short of these lows that were set towards the end of March. Price being below today's pivot point for most of the day, for entire day actually, 1,747. Has reached S1 once, twice, and now 3 times. S1 being at 1,716. So I think if we get a close below S1 on this current candle, we could potentially see a move to today's projected range low. We will also have S2 very close to each other. That lies between 1,700 and 1,701. Right, and this brings me to gold. Interesting thing on gold. I'm not going to go into this triangle. I think I explained this so many times over. You guys must be pretty tired of it. But very fascinating to see how this channel is still working on gold. Although price sort of broke a little bit below it, draw a line parallel to one of these channel lines and look at all these lows. Oh, it was perfectly riding that same angle. And this is a great example of using a ray again or whatever parallel to one of your channel lines. You have a previous instance where price overshoots an area, use the same angle, project it back to the upside, and guess where this spike that we've seen today found resistance. So very cool to see. Question still is this now the fifth wave? I think it could potentially be very close to a fifth wave, either being a fifth wave, since this move to the upside here. If I have to zoom into this, still thinking that a fourth wave either ended here or here, most likely over here. And that this mess over here was potentially a leading diagonal. 1, 2, 3, 4, 5, a very small A, B, C. And then this was a third wave potentially a fourth wave, and then a fifth wave to complete that entire sequence. So it might have either completed it now or might still do that a little bit later on. And if that does happen and occur, then I'm potentially expecting a large decline in gold that could retrace this entire sequence that we've been tracking for quite some time to the upside. All right, so price still respecting this channel. We had today's pivot point as was hit about a few bars ago, earlier this morning at 2038.3. And again, where was that? It was right at that center channel line. It actually tested it once, perfectly tested again, and it's trying to bounce higher now. So either a fifth wave has completed, or if we just look at this sequence to the upside, then we potentially, for this last fifth wave, just seen a 1, a 2, a 3, maybe a 4, and a fifth to follow, and then see a decline. Right, so that's my thinking. So yeah, if we're going to see a decline in gold, potentially, you know, fears must subside for some reason. I don't know what that's going to be. Is this banking fear thing going to subside? You know, why is everyone fleeing to gold at the moment? Obviously, the reasons are pretty clear. But I quite often, you know, if gold hits very important areas in conjunction with other markets, then you might all point to possible reversals in both of them, for the ES going higher, NQ and YM for that matter, as well as gold potentially then moving lower. So all about also following the sequences, not saying in the bigger picture this is like bearish, just thinking that, you know, the sequence is very near to completing. Now, whether that's happened now, today, or still needs to happen, we'll just have to again wait and see. Maybe we'll have our answer by the end of today, leading into next week, hopefully. And then, yeah, if this is the case, we start seeing strong declines, then we could switch our bias to bearish over the near term and bullish over the near term for the ES, the NQ, and the YM. Crude oil, on the other hand, bam, none of these retracement levels held. So I was showing you yesterday that the only thing that I could try to figure out after a 5-wave sequence, because if you have a 5-wave sequence, one would expect some sort of an A, B, C. In this case, after a bullish move, you get a correction that goes counter trend, and you must find a higher low and then move back up again. So if you have a 5-wave sequence and then followed by another move lower that breaks the start of that 5-wave sequence, then that tells me that this was potentially a C wave of an expanded flat. And I think we looked at this yesterday, but geez, it's very, very difficult to figure out what's going on here. Whatever's going on here, if this was a C wave of an expanded flat, then maybe this was a 1, 2, 3 A wave, 1, 2, 3 B wave, and then you have a 5-wave sequence for C wave, and our prices move lower. So I think that is potentially what happened over here. The question obviously is, what's all of this prior to this mess over here? You know, are we seeing a 1, a 2 with a 3rd wave still underway? Very overlapping price action. This could also be corrective, whatever the case might be. But I think what we've seen here since actually December was an expanded flat of some sort. Now we can already see a very strong retracement back to the upside. So a pip of a previous low followed by a strong reversal. Now, whether this is just a bounce higher with more downside to follow, I really can't tell you that. We'll have to start seeing price break previous structure on the way down, and there wasn't really much of it because it's been very impulsive down to the downside. So yeah, we'll be a bit on the sidelines, and crude will price already took out today's projected range low, and S2 was around about 65.45 towards 65.73. Just fell short of today's low deviation, 63.34, and again just put that previous low and boom, back to the upside. So yeah, it's interesting times, guys. That pretty much concludes today's analysis. Again, hopefully you understood what I meant by that expanding triangle. With price being so close to that invalidation level, could still be an explanation of what's going on here. But again, then if I'm on the right track here, price will really, really, really need to find support very soon and reverse up strongly back to the upside. And soon after an expanding triangle ends, you quite often get a very strong reversal. So watch these invalidation levels, watch tomorrow's non-farm payrolls, how that plays out, how the market reacts, as well as look at price action. Are we starting to see price pumping up to the upside? Then I would say, yeah, that potentially was the end of an E wave. Right. That's it for me, guys. Got any questions? I really appreciate it. If not, then yeah, we'll be back again on Monday.
Roger that. Well, thank you so much, as always, Richard, for the detailed and insightful analysis. As Richard said, if you had any questions for any of the markets we covered, any of the analysis, or what's ahead for next week, please don't be shy. Feel free to fire away in the chat. We're more than happy to hang around and chat with you. If not, again, I just want to remind you, we will be live next week, Mondays, Wednesdays, Thursdays at noon Eastern time. And on Monday, we will be doing a featured Ninjacators tool spotlight on the micro power trader. So whether you're already an active user and you want some more tips on it, or you're just curious, please feel free to join us on Monday at noon Eastern. As soon as we get done with the analysis, we'll dive right into a live demo of the micro power trader.
Perfect.
Awesome. Well, it looks like we don't have any questions coming through just yet. Thank you, Hal, as always, for being with us. We love having you here. We hope to see you again next week, of course. But yeah, if no one has any questions, we'll probably just go ahead and wrap for today. Send everybody out into a nice weekend, and then regroup on Monday at noon Eastern time. Great. Well, it looks like that'll be the case. So we're going to go ahead and wrap today's session. Thank you again, everyone, for joining us. Thank you, Richard, for the session, as always. I see it looks like Joseph had just jumped in here. Joseph, I apologize. We're actually just wrapping this session. It's great to see you here. We're very glad to have you. Joseph, I just want to let you know, if you aren't aware, we're live 3 days a week, Mondays, Wednesdays, and Thursdays at noon Eastern time. And I was just telling these folks, we will be back on Monday for more analysis, as well as a Ninjacators tool spotlight on the micro power trader. So we'd love to have you if you come back, Joseph. We'll love to see you on Monday and any future sessions as well. So thank you again, everyone. Have an awesome weekend. If anything comes up in the meantime, please feel free to reach out. Grab the support phone number on our website. Give us a call. We're always happy to help. Great. Thank you, Joseph. Awesome. We'll see you on Monday, and we'll see hopefully all of you on Monday. So everybody have a great weekend, and we will see you soon. Thanks again. Bye-bye.
Great stuff. Cheers, everyone. Have a great weekend. Goodbye.